Well, hello, and thank you for joining us today. This is Gene Zana with MBO Partners, and this is our webinar series, which is going to today talk about how to calculate your bill rate, a pretty popular topic. So I want to thank everybody and welcome everyone, and we're going to start by just introducing myself. Again, Gene Zano, I'm the President and CEO of MBO Partners, and along with me today is Steve Aronset, who's our Director of Consultant Services. Say hello, Steve.
Hey, everybody.
A little more energy, Steve.
Hey, everybody. How you doing?
And our special guest today, I'm really happy to have with us, is Gary Ritchie, a very distinguished independent consultant in his own business today. He's owner of Ritchie Leadership Group, and give a little bit of a background on Gary. He's based in San Antonio, Texas. He's spent 33 years in the federal government and primarily in the Air Force, going through a number of bases, and has focused primarily on logistics and acquisition and management, and has really achieved a lot of leadership acknowledgement, and has actually led an air logistics group that was responsible for over 15,000 people, and it's just great to have Gary to join us today and share his experiences with us. So I want to welcome Gary, so please say hello, Gary.
Hi, everybody. It's great to be here, and I appreciate the opportunity to spend some time sharing my experiences with you.
All right, and we're going to hear a lot more from Gary later on. Let me just go through some housekeeping first. You should see on your screen these little controls. They control the webinar. What I want you to pay attention to is the full screen icon to maximize the presentation so you could see it in a larger mode if you haven't done so already. But also you could raise your hand. There's a little hand button there. And if you click on that, we get notification here at the control panel that you have a question, or you want to we could either unmute you so you could ask a question, or you could also type a question into the chat, and we'll accumulate those questions for us to answer them during this webcast, assuming we have time, which we generally do at least for a few questions. And then if you want to actually speak, and we'll open up the microphone, but right now everybody is on mute. So if you do have any questions, chat them along, and we'll be sure to try to get to every one of them. So a little bit about MBO Partners for those of you on the line that may not know who we are. MBO Partners, our whole business is designed to make it easy for independent consultants and those that want to be independent consultants to make it easy for them to do their work and to work with their clients. We also work with clients to make it easy for them to work with independent consultants, and we provide a series of services and tools and benefits and platforms that we'd love to talk to you about further. If you want to learn more about that, go to our website, www.mbopartners.com. So in addition to that, we also have a webinar series that we try to do at least once or twice a month on topics that we know are of interest to independent consultants. And if you want to sign up for that series so that you're on the mailing list, please just send an email to webinar@mbopartners.com. I'm now going to hand this over to Steve, who's going to talk to you today and give you some opening remarks for 15 or 20 minutes or so about bill rates and how to calculate bill rates. And Steve, why don't you take it from here?
All right. Thank you, Gene. I appreciate that. So one of the first things that I want to put out there is our target audience, the types of people that we speak to in our industry. And first are the aspiring independent consultants, those that are currently working W-2 right now, but they want to become less reliant on a traditional employer and make that move towards independence. So whether they're on the cusp and they're about to do it in 6 months or 3 months, or even if it's years out, we often get folks that are calling MBO Partners to get the type of advice so that they have the best practices when they go independent. And then the second audience are those current independent consultants. And these are professionals, seasoned, lots of experience, and they've worked independently in the past. Maybe it's just on 1099 using their social, or they've set up some sort of entity and they have an LLC. But they're used to working independently and have their network of clients. And the common questions that we get are, how do I increase my utilization rate? Or how do I factor in these other hidden costs that I typically run into? Or how do I maximize my rate? And how do I use market and value-based pricing strategies to earn more for the amount of work that I'm doing? And sometimes even, how do I charge a higher rate and not give that kind of sticker shock to the client? So different questions, different audiences. So those are types of people we speak with. The next is kind of bill rate calculation methods. So this is what we're going to dive pretty deep into today. There's a lot of different ways and philosophies of calculating your bill rate. And one's not better than another. It really depends on the industry that you work in, what you do, demographics. So, however, there is one common kind of underlying theme, and that is kind of the cost-based method. And it's usually a good way to establish your floor. I mean, the market's constantly changing, and there's going to be new businesses and technologies and competition that's going to affect your rates. And it's just really important to calculate your bill rate correctly. There's a lot of risk associated with doing it the wrong way. You could undercharge and leave significant dollars on the table. You could overcharge and potentially lose business. So kind of finding that right spot is kind of the magic in what we're going to go over today. And finally, one last thing about calculating your rate. By going through the exercise of calculating a cost-based method or using that methodology, is that it's going to give you confidence and the ability to charge what you need to in your clients. Even though you may not be asked from a client, to go through your total cost, you need to be prepared to articulate the cost and the methodology that you used when you came up with what the quote was to your client, whether it was a deliverable amount or a bill rate. You need to feel really confident and comfortable that what you're quoting is the right amount and you can defend it. So on to the next slide. So this is kind of the base equation for calculating your costs. There's two categories, which are variable costs and fixed costs, which you may remember from economics back in college. And variable costs are broken into two areas. They're labor costs and then taxes and benefits. And we're going to get into a little bit more detail on what exactly those are. And fixed costs are overhead, and these are things that aren't necessarily going to be invoiced to your clients, but are essential to running the business and kind of keeping the gears running. And you add those things together, and you get your total cost. And your total cost is kind of that base number that you need to continue moving forward with building this equation. So let's go on to labor costs. So labor costs. You want to ask yourself to figure this number out. How much would you have to pay to hire an employee or a group of employees to deliver the service that you plan on selling to a client? So the client's buying it from you, but you need to consider how much would you pay if you went out to the market to get this service done. So, for example, if you needed to hire a programmer and pay them $60,000 a year, or maybe you need to hire a designer and you need to pay them $5,000 a month, whatever the case is, you need to consider what that salary number would be. And it's not always easy. So if you're having trouble, you can go to sites like careerjournal.com. There's another pay scale, and there's some good info on salary.com as well. And if you're caught in between figuring out what that number should be, just remember, always keep it pragmatic and practical. Don't inflate the number for purposes of inflating it. So some of the items to consider when figuring out your labor cost. The first is experience. You need to figure out the level of experience that's needed in order to deliver this solution or skill to the client. Obviously, higher the skill, the higher the pay. Lower the skill, lower the pay. Consider the length of the project. Is this something that's going to just take a week? Is it a month? Is it a year? And put that into consideration for how much you would pay for someone to do this for you. And lastly, make sure that this salary that you're coming up with isn't just what you've been earning as a W-2 employee today. It's very easy, especially for those aspiring independent consultants, to just say, okay, I'm making $150,000 a year today, and now I want to convert that to a bill rate. Well, that is under the assumption that you're going to be providing the same services that you were when you were W-2 when you're now independent, which is not always the case. It's going to be dependent on the client, what their needs are, understanding the scope of the project, and what you're going to deliver, whether you or a team of people. So just keep that in mind. It's not always just a correlation between W-2 salary today. Next, you're going to want to add in taxes and benefits. So taxes and benefits gets really, really detailed. There's a lot of different numbers in here, but if you want to just go with a pretty comfortable number, just add 25 to 30% of your labor costs. If you're just looking for an easy calculation, that's the way to do it. But if you want to get into the details, it's really made up of a bunch of different things, and one of those things is payroll taxes. And payroll taxes are the things that an employer is responsible to pay when they pay an employee. So an employee may get $60,000 a year, but when you're an employer, you're actually matching Social Security, Medicare, and you're also responsible for things like unemployment, workers' comp. So these additional costs you need to consider into your equation, and there's specific percentages for each one. And then the second thing is benefits. So most employers provide some sort of subsidy on the costs associated with medical insurance. So, yes, the employee might see $60 a month, but the true premium is actually $400, and the employer is paying a significant portion of that. So, that's going to vary by state, by single versus family coverage. So you want to just take that into consideration. In addition to that, usually most employers do a retirement match as well. Across the board, industry standard, you're probably looking at about 2 to 3% for most employers. So these are just some percentages and numbers that can help you come out with that. But we have a really good tool for getting into the specifics if that's what you're looking for, and I'll get to that later.